Hey guys, it's Wednesday here in Korea already, March 9th, 2016. I'm just going to go straight into the charts. I'm going to use a Thinkorswim exclusively today for the oil. I didn't trade yesterday, but just want to do a quick review on the movement yesterday. And kind of same thing from the previous day where, you have a movement, a bias originally to one side. And then if it goes the other way, how to switch your bias. So we're going to discuss that real quick. So during the Globex session, we had a move down, right? And then we had some consolidation down here in this area. And then we actually ended up breaking out to the upside, right? So came out this high right here of this consolidation, came back to the top of that, and then ended up moving up for just about 20 ticks. I've been noticing that lately. Just about 20 tick movement out of a small consolidation breakout during the Globex session. Came back down a little bit deeper, then it finally took off, right? And if you didn't get out, if you didn't take this trade here, you could have taken this next high breakout right here. And if I zoom in a little bit closer, you can see that. This is a 5-minute chart here, so let me just go ahead and draw a line so it makes it a little bit easier for you guys. So I'll do a little right there, all right? So you see that breakout. And then once it broke out of there, it was just about a 10 tick move, but you see how that high held when it came back down and retraced it. So the confirmation, and then came back down for that small retracement, about 10 tick move. And then once bars pushed past here, it took off for about, let's see, 10, 20, 30, 40, 50, almost a 60 tick move. So that would have been a nice healthy profit there. If you would have missed that, you could have had another retracement over at this level, and you can see if you move left, or the highs of yesterday where there was some consolidation over here, these are some prices that you could have looked at for resistance and support levels if it broke. So let's just say the top of this level here. So it broke out above here, obviously, so this could have been a support level, just from the previous day, and initially it did kind of move back up. So you had about one chance here to get in, maybe a second one here, a third one, and then maybe a fourth one here. So just kind of give you an idea of how you could have looked at the charts here. Now the big thing though is if it didn't hold here, where's your next trade? Well, once the morning opened, you had a pretty strong move to the downside, right? So you had a first test, second test, this area could not break the 39, and then completely collapsed. So at that point, you're looking, all right, what is it going to do once it comes to these levels here, where there was support and the markets moved up, right, and broke yesterday's high, broke the high of the Globex session. Well, these levels should act as support on the way down, and it kind of did. First time it came down and tested it, came up about 10-15 ticks, then it broke right through there. Buyers are trying to fade the market here, right? Did not work. Sellers took over again, pushed it really down, really hard within this 5 minute. I mean, you're seeing a lot of selling, right? So at that point, you got to start wondering, well, either it's going to hold here and bounce, which it didn't, obviously in hindsight, but if either it's going to hold and bounce and then I'll come back in after it breaks above here, or it breaks below the low of the day of the Globex session, right, where all these buyers were in, which is probably here, right, and then the lowest level was here. So the break below here, this price level would have been, all right, confirmation that I would have to switch my bias and that I would have to look for a sell. So, and you can see the moving average started to cross over and everything like that. And it'll probably be a little bit easier on the 1 minute chart, but for this example, I'll show you the 5 minute. So let's look at what happened here. Breaks down, tries to bounce one last time. So people were fading this market, obviously, right here, or trying to get out of their positions. And then this huge, look how much bigger this. I don't usually talk about candlesticks, but let's just look at this 5 minute. Look how much price movement happened. That's about 10, 20, 30, almost a 40 tick move in 5 minutes. That's more than any other move throughout the entire session. All right, so that kind of gives you a little bit clue of who's in control at that point, right? Especially because we broke the low of the day. And look what happens. Breaks below the low of the day. Same thing, right? Market profile. You got their low market profile, low value area, LVA. Here in the green on Thinkorswim chart. Comes back up, retests it. Look what happens after that. It never comes back up and goes back down. So the same system applies. So same setup. Break of low value area, right? Now the trend is starting to move down. You can see. Because this took a long time to move up. This thing was very short in that time period, and look how fast it moved too, right? So there's a possibility it could bounce really hard or keel over. Well, if it was going to bounce, it should have bounced in this area here. It did not. Broke down. So then you change your bias and go, all right, where do I look for to sell? Well, look for that low value area, which also is in line with the low of the Globex session. Came back up almost to the tick, literally into that area, and look how it fell for the rest of the day, right? And then we actually ended up coming down all the way to almost the beginning of the actually exactly to the beginning of yesterday's open during the US market hours. So pretty insane move there. Would have been a little bit more difficult because it got pretty choppy as it went down, but your first entry, right, is always, like I always talk about, is most important. And this setup worked right there, and that's how important it is to change biases. So you could have made money on the upside, and you could have made money on the downside, right? So that's a lesson there. Let me just show you real quick Fibonacci retracements. We talked about people that were probably fading, right? Trying to make bounce, hoping that this thing would bounce off of this if buyers were in control, right? But smarter guys like you guys would have been buying down here, or maybe buying off this breakout, watching this thing kind of come up, and maybe this last chance here. But once it broke here, you just said, all right, let me watch and see what this market does. Now let me do a quick Fibonacci from yesterday's low to the high. All right. Okay, so if people are using these levels, let's just use this first one as an example. Look at the key inflection points, like your 50%, your 60%, 76% retracements, right? So let's just see where people were trying to fade or buy in these markets. As it came back down, look what happened as soon as it hit that 50, the huge mark down, right? 50%, boom, came up. But this is where your entry would have been anyway. But the selling continued after this, right? So it came back down, right? And then 62%, boom, came back up. 76%, boom, came back up. Tried it again, right? Buyer's like, all right, 76, this is the number, right? We all use Fibonacci, 76, last line in the sand. Didn't work, right? Held pretty good for a little while, and then collapsed after the end of the day. So no buying here on oil, but just kind of nice to know. Helps you kind of talk yourself through as you're looking for support and resistance and maybe targets as you enter the trade. So those could have been target areas as you went down, is basically what I'm trying to say. So looking at market profile, you might have used these levels here, obviously, for targets as well. But they usually probably would have lined up with the Fibonacci. So just something that you guys can use as a tool to look for targets. Yeah, I think I covered everything I wanted to cover. Hope you guys got kind of a good overall lesson on that. And the market's been pretty volatile. So basically, I guess the lesson here for the last 2 days is, remain flexible. Be able to change your bias on a given notice, depending on your time frame of trading. I like to just trade between this time right here. So once the market moves, it moves, and I'm out and I'm done for the day. You know, I'm not trying to stay here like and work like 10, 12 hours of the market. But if you were trading the U.S. open hours, you know, that's something that you could have looked at. So the second lesson there is, you know, you got to be patient, because a lot of stuff happens later on in the session. So, you know. All right, guys. If you guys got any questions or comments, please let me know. I'm gonna keep sharing. There's other videos that I still need to make based on some requests out there. But I hope you guys are making money, and keep at it, guys. All right. Talk to you guys soon.